Hi, everyone. This is Jason Biarco of Wall Street from Main Street. Welcome back to another Wall Street from Main Street podcast interview. Today's special guest is a returning guest. He's a retired software entrepreneur. He successfully sold his company, I believe, before the technology bubble burst. He's now a hedge fund manager, and he's host of the popular Macro Voices podcast. Erik Townsend, thank you for joining me again.
Thanks for having me, Jason. It's great to be back.
Yes, I'm really excited to get your opinions on this next level high financial stuff, which is what you discuss on your podcast. Now, I hear a lot of people talking about a strong dollar. I hear it on the financial news. I read about it in articles. But in your opinion, how much damage can a strong U.S. dollar do to the global economy?
Well, there's no doubt that a really, really strong dollar could do an incredibly large amount of damage to the global economy. And the reason is there's so much U.S. dollar denominated debt around the world. So what happens if you're in another country and, your local economy is producing profits and earnings and so forth in your local currency, but that local currency doesn't buy as many dollars as it used to, then it becomes very difficult for you to repay your debt. In a lot of these smaller countries, businesses cannot borrow in their own currency. They have to borrow in U.S. dollars because that's the only credit that's available to them. So if you were to say, the U.S. dollar index doubled and the cost of dollars was twice what it used to be, obviously a whole bunch of people all around the world would go bankrupt overnight. Now, it's not going to double. So the question is, okay, how much can it go up before it starts to really cause problems? And as you know, I'm sure many of our listeners remember the 2008 credit crisis, these things tend to sort of, mushroom and suddenly start to blow up. At first, there's no problem, and then you start to have problems in credit markets, and that causes people to be selling, and people are selling, and interest rates are going up, and it becomes more expensive to borrow, and all of the sudden, things mushroom all at once. So what is that magic level? I think that's really the question, is how far does the dollar index get to go up from where it is already, above 100? And of course, it's been weak in the last couple of days. That weakness, I think, is entirely a reaction to China having intervened in its own currency market. And, it looks like we're down to 101.5 or so on the dollar index. It's back to 102.17 as we're speaking on Friday afternoon. So I think it's already starting to recover from that little depression. Can it go to 105? Can it go to 110? Can it go to 115? What's the number where everything falls apart? And my prediction is, if you look at the fundamentals that are driving this rally, they just continue to get better. As we see interest rates increasing in the United States, that means that the U.S. Treasury becomes much more attractive to foreign investors. They would rather have U.S. treasuries because they yield so much better than euro-denominated treasuries in one of the countries in Europe. So how much of these things, if Donald Trump's repatriation efforts work and he forces a bunch of companies that have gone offshore to come back to the United States, well, that means they're going to sell their foreign assets and buy U.S. dollars. All of these things have a dollar bullish effect. And I think the $64 million question for 2017 is, at what point do central bankers start to intervene and say, okay, we got to do something to arrest this dollar rally? And I have no idea what the answer is, but that's what I spend most of my time thinking about.
Now, the dollar index was at a 14-year high. You said it's been having a correction now. But, I see the fundamentals that are driving it. The global economy, the real fundamentals, if you look at the evidence of the global economy, it looks to me like the global economy is not doing well. It's either in recession in many countries or getting worse than recession, borderline depression in many different countries. I think there's over $3.5 trillion outstanding in corporate foreign corporations that have dollar-denominated loans that are sensitive to this currency exchange rates. Do you expect then that the dollar index, you mentioned currency intervention by central banks. I think we've had currency intervention by central banks for a long time. Do you think that this type of currency intervention could create enormous volatility then in exchange rates going forward?
Yeah, and I think that where it will come from is speculation, long before there is another Plaza Accord. And of course, the Plaza Accord was the famous intervention where the United States and several other countries decided to work together back in, I think it was 85, that at the Plaza Hotel in New York City, that they came to that agreement. long before there's another Plaza Accord, there will be people in markets speculating that it's coming. There was supposedly this Shanghai Accord where there was a quiet, behind closed doors conversation in the beginning of 2016 that was supposedly, according to, this is a lot of rumor mill stuff, similar to the Plaza Accord in terms of its function. Did that really happen? I don't know. But at some point, there will be speculation. And as people speculate, they're going to think that it's coming. And if they think it's coming, they're going to start placing their bets. And that's going to move markets. And then as that moves markets, maybe all of a sudden we don't need that action anymore because the market's gone the other way. Or the other, trades start to exacerbate things and increase the priority of it. So there's a lot of feedbacks in this system. And it's very hard to tell. I think that it will lead to a lot of volatility and a lot of speculation, though.
Yeah, Jim Rickards mentions in his new book, Road to Ruin, how complex the global economy is, how it basically can't be modeled with any of the current modeling that PhD economists are using right now, and that you mentioned feedbacks, we don't know what's going to happen when the central banks do one policy item or Trump puts up, tariffs against China. There could be lots of unintended consequences that can happen to it. One thing, though, that you mentioned earlier about a strong U.S. dollar, there's record amounts of dollar-denominated debt globally, but it seems perverse to me how, we have record amounts of dollar-denominated debt globally, both from foreign governments and from foreign corporations, and yet we hear guys like Raoul Pal, top hedge fund manager, him, Real Vision TV, talk about how there's a global dollar shortage. So it just seems crazy how, on one hand, we have record amounts of dollar-denominated debt, and then on the other, we have a global dollar shortage. It seems, to use an analogy, it seems almost like the drug dealer who's been giving away, samples of drugs to get people hooked on their product, get more junkies.
Well, and, those two things are not necessarily incompatible. You can have lots of dollar-denominated debt, but at the same time, if you have this repatriation going on, if there are a lot of corporations that are going to be moving their assets back to the United States, if you have a lot of foreign investors that want to be in dollar-denominated assets, you can't buy treasuries, U.S. treasuries to replace your investments in European bonds until you buy dollars first in order to buy the treasuries with them. So it really does make sense that you can have record amounts of dollar-denominated debt and still have a dollar shortage. And, you're right. Those things happening at the same time, it's mind-boggling. And, it is going to lead, I think, to a lot of difficulty for the global economy as we try to sort this out. And I think the biggest moving part is nobody knows the answer to that question of how far can the dollar index appreciate from here before something goes bump in the night and emerging market debt starts blowing up. Is that just something that paranoid guys like me worry about, but, really it's not going to be a problem, or is it something that's going to blow up starting tomorrow morning? Nobody knows. We're kind of in an uncharted territory here, and we'll see what happens.
Yeah, and I think we're not going to get a lot of the information. There's a lot of stuff that goes on behind the scenes from my contacts. There's stuff in 2011, Jim Poplava was talking about this, that it looked like there was going to be another European bank problem with Greece and other government debt in Europe, and then, there was intervention in the markets, and boom, things were back to normal. So we don't know what's going to happen going forward in terms of the politicians changing the rules. In terms of the strong dollar, though, do you think the large cap dividend stocks, the large multinational corporations, do you think that these guys are going to start missing earnings, and that's going to potentially add to headwinds in the stock market coming up and put in a topping process?
I'm just blown away by all of the bullishness that exists now, and bullishness by some really accomplished people. We can't take a Ray Dalio or a Stan Druckenmiller, who have both become extremely bullish in the last few months. These guys are not amateurs. You can't just dismiss what they're doing. But I just look at it and it's like, holy cow, not only the dollar strength, that's definitely a big part of it, but as Raoul Pal has said, we are way, way, way long in the tooth in this business cycle. It's time for a recession. We're way overdue for one. Meanwhile, another thing I think Raoul has described, if not someone else has, in this presidential election cycle, when you have the end of an 8-year presidential term, there's almost always a recession within the next year after that. And what blows my mind, Jason, is you've got all these people saying, no, look, super duper bullish because Donald Trump is the new Ronald Reagan, baby. And I'm thinking, wait a minute. Ronald Reagan, the first 2 years of his presidency were a massive, massive recession, a very deep, horrible recession. So, okay, if you think that Trump is the new Reagan, why are you bullish right now about the stock market? I mean, if he was successful at doing the things that he wants to do, Reagan was elected, I don't know if it was quite a landslide, but by a very comfortable margin. Trump didn't even get the popular vote. So he's got all kinds of people that want to prevent him, if they possibly can, from doing anything. If he were able to accomplish the things that he's setting out to do, yes, it will be very bullish for stocks several years down the road. But, why is everybody buying stocks hand over fist? New all-time high today, just this afternoon, 2277. On E-mini S&P. Futures, of course, the futures trade a little bit below the actual cash index, so it was probably 2280 on the cash index. Holy cow. Why all of this bullishness? And I want to say that it's time to fade this rally because this bullishness is just way overdone. It's crazy. It's time to be bearish here. Take the contrarian view. But I look at the credentials of some of the guys who don't see it that way. Stan Druckenmiller, Ray Dalio is the most successful, most famous hedge fund manager in the history of the planet. You don't just dismiss a guy like that when he comes out with a super bullish message, which he just did before Christmas. But at the same time, I cannot figure out what these guys are thinking. It doesn't make sense to me.
It's difficult to tell, Eric, if this is the crack-up boom like the Austrian school has been talking about, where all these central banks are pumping in, newly created digital currency, rocketing the asset prices to higher and higher ridiculous valuations that just continue to stupefy us, or if, this is looking back through financial history, more like getting closer to October 1929, where a lot of other markets were already crashing, a lot of other countries in the global economy back then were already in depression, and tons of flight capital for a bunch of different reasons came to the United States and pushed the markets higher until then, they eventually crashed.
And even Donald Trump himself has said that he thinks that this stock market is overvalued. So all the people are saying, all the bulls are saying Donald Trump is going to usher in this new era of economic prosperity that's going to be super good for the market. If they really believe in Donald Trump that much, maybe they should listen to what he's saying about these equity valuations. I mean, I think it's crazy.
Well, Donald Trump, now that he's won, he's kind of taking credit for some of the rally. So, I mean, who knows what Trump really believes. I mean, he said what I thought at the time was the truth, right? That the Federal Reserve was manipulating interest rates lower, that the stock market was a bubble. So the truth at that time resonated with a lot of people. But now that he's won, he's starting to act like a politician and flip-flop.
Yeah, it's I suppose no surprise there. But, he made a very good point back then, which is he is clearly going to be much less tolerant of the Fed keeping interest rates artificially low in order to prop up asset markets. So if he, if you believe that a lot of this rally since 2009 has been a result of monetary policy intervention and overly accommodative monetary policy, Trump's been pretty darn clear that, he was not going to reappoint Janet Yellen, that he doesn't believe in that policy. It would be very, very difficult for him to reverse policy for the sake of, trying to help the stock market here. That would be a very difficult face-losing moment for him. On the other hand, look at all of the people, all the Wall Street boys that he's appointed to his cabinet. They're going to be friendly to Wall Street. So it's going to be really interesting to see how this gets reconciled, that Trump was so outspoken that the Fed was just trying to, keep asset markets propped up. What's the policy going to be going forward? Is he going to really insist on that being corrected? And if he's going to insist that the Fed not behave that way, his cabinet selections are pretty interesting, aren't they?
Yeah, well, if Trump really does want to be like Ronald Reagan, and then he wants to institute some version of supply-side economic stimulus, it would seem to me that he would need lower interest rates, right? Because if he had higher interest rates, he wouldn't be able to borrow as much for his infrastructure spending, potentially building a wall, and then, upgrading the military and the defense like he's talked about. So I'm not quite sure financially how all the stuff how he's going to be able to afford all the stuff he wants to be able to spend on.
Well, and even if he could find a way to afford it, he's got half of the country vehemently committed to trying to stop him. And it seems like he's really going to stay on this wall thing. A lot of people thought that it was, just campaign rhetoric and it would be quietly forgotten about after the election. Well, that hasn't happened. He's been very outspoken that he's serious about the wall, and there have been some leaked documents saying that he, maybe making plans to do a day one announcement when he takes office. Okay, we're building the wall. Well, if he tries to build the wall on executive order without congressional support, there's going to be a huge legal battle over that. And I wouldn't put it past him to try it. But there's a lot of very, very strongly motivated people that are going to do everything they possibly can to stop him from doing any of the things that he wants to do. So, whether or not everybody seems to be focused on whether or not Trump, if he achieves his goals, would be good for the stock market. And I agree, it would be good for the stock market if Trump achieved all of his goals. How the heck they think he's going to do that is a mystery to me, when he's probably got more opposition, more people hating him, more people trying to prevent his success than any other incoming president in U.S. history. I mean, how is he going to do all this stuff? I just don't see it.
It's a great point. I mean, there's a lot of Republicans that hate Trump. We know the mainstream media hates Trump. They'd love to get him impeached. So they're looking for any type of grounds to impeach him on. I mean, they're talking about his business interests. They're talking about him committing treason already. I see this on Twitter, articles being written. I saw a couple weeks ago articles before the New Year's, articles about top 10 reasons how Trump is a Russian spy. Despite, no real evidence, people are still and this is on a credible investing website. This was on Market Watch. This was a op-ed on Market Watch, which is normally a pretty basic investing website with dividend stocks and basic financial news. And here's this op-ed article about that.
Well, and Paul Ryan was very outspoken, too, with this supposed Russian spying thing. And I agree with – I can't believe I'm agreeing with Donald Trump on anything. But I agree with Donald Trump that there is no evidence whatsoever that Russia did anything. And as Julian Assange said, a 14-year-old could have hacked Podesta's email. It was a very simple task. And there's no reason to think that Russia did it. But, boy, did you see that clip from Senator Lindsey Graham talking about how important it was to basically start a war with Russia, and he's very disappointed that Obama has not done more to, than just these sanctions, which, as far as I can tell, were based on zero evidence. Listen to the rhetoric. People want war. And yeah, I agree with you. They are going to try to take this supposed Russian spying thing. And, Trump got elected because of Russian influence. And, now you can imagine that I think Trump is smart enough to recognize that a war with Russia is a really dumb idea. If he were to do something brilliant, let's say that Trump really surprised all of us and was a much better statesman than a lot of us fear that he might make, and he goes and he actually forms a really good relationship with Putin that leads to a new era of peace and cooperation between the United States and the Soviet Union. Half the country is going to call that a conspiracy to say that Russia was behind the whole thing, and he's their puppet, and Russia's controlling the United States, and we've got to go to war. So even if he does something good, it's going to look bad against him in the eyes of half the country. This guy has got huge headwinds to face. I think it's going to be harder for him as an incoming president than almost any other president in history in terms of how much opposition there is and how many things are stacked against him. And a lot of actions that President Obama has taken in his lame duck period here, seem to be designed to make it harder for Donald Trump when he takes office. The sanctions against Russia and expelling the diplomats and all this stuff is just going to make a bigger mess. And I think they're doing it to make Trump look bad. And as you say, I think there's a lot of people that are going to continue pushing. I'm shocked, too, by, I'm actually reading about a lot of these celebrities that said they were going to move out of the United States if Trump was elected didn't actually do it. But you know what? There's a lot of people, though, that are. There's a lot of people that are actually freaking out so much that they are, they have very strong left liberal leaning political views, and they are so convinced that they're moving to the southern hemisphere because they think the weather patterns in the southern hemisphere are going to be favorable when Trump starts a nuclear war, which they think is inevitable. And that's why they want to be in the southern hemisphere. And as a result, there has been a huge increase in resident visa applications in Chile and Peru. That's a fact. And I'm thinking, wow, people are actually freaking out to the point that they are really and truly leaving the country because they think Trump is going to start a nuclear war. And frankly, if you listen to Hillary Clinton's rhetoric, I think she was the one who was more likely to start a war with Russia. I think Trump is probably going to start a trade war with China. But as far as a shooting war, I think Clinton would have been the more dangerous person. But boy, there's a lot of people who are convinced that Trump is the most dangerous man in the history of the world, and they're literally bailing out in panic as a result. It's amazing.
Yeah, those are some great points. Hillary Clinton is a candidate of the military-industrial complex, which, those neocons in the military-industrial complex basically has controlled both political parties. They donate to both very, very heavily with their lobbying and political donations. So Lindsey Graham, John McCain, those guys are, pro-war, pro-neocon types as well. Because Hillary Clinton was a Democrat, people think, oh, Democrats are this pro-peace party, but if you go back and look at who's gotten the United States into most of the wars, it's been all Democrats. So, World War I was Woodrow Wilson, World War II was FDR, Vietnam and the Korean Vietnam was Democrats as well, with Lyndon B. Johnson. So, the Democrats are not this pro-peace party like the stereotype tends to claim, although in the past, I guess maybe they were partially anti-war. There was a segment of it. But it's just very hypocritical what the media has done, especially the mainstream media. I'm just not really a fan of them anymore. Maybe a long time ago they used to do more objective, investigative reporting, but I don't trust them anymore. I want to switch gears. You mentioned the trade war with China. Now, Kyle Bass last year, early in 2016, he put out his investor newsletter. He talked about, he was predicting a very large China RMB devaluation. He was talking about liquidity problems in their banking system. He was right, but he was a year early. Do you think that China is going to continue this devaluation of the RMB?
Yeah, I think they're going to be forced to. I certainly don't think they want to, and it's very consistent with what Kyle has said. The thing that's hard to gauge, they don't want to depreciate the RMB too much because that causes a set of problems. But if you look at the size of the credit expansion that's occurred in China, it's just outrageous since 2009. And Kyle's prediction has been at some point, the place it really accelerates is when they're forced to recap their banking system. And the only way that they can do that is to dramatically devalue all at once. And that has not happened yet. So the question is not quite the same question you asked is, do I think that's going to happen? I think it's a fascinating question. I'm watching it, but I don't know how to measure that. Kyle thinks there's going to be this sudden moment where everything all goes to shit at once. And, they basically have the 2008 credit crisis event of Chinese credit expansion, and that results in a dramatic devaluation needed to recap the banking system. Is that coming? You kind of need to be a banking analyst with access to data on Chinese banks. And guess what? All the data in China is mostly bogus anyway. So you'd have to be really good at forensic accounting and figuring out what's real and what's not. It's beyond my pay grade. I don't know what the answers are, but certainly Kyle's a smart guy. He's been early, as you said, but he's been right as well. And I think that it's a very interesting situation. What's surprising to me, I just interviewed several people in the last couple of months on Macro Voices who are all saying that they don't really see China as a big problem. And I'm thinking, boy, China is starting to dump their treasury holdings, their U.S. treasury holdings. That could exacerbate the pressure in the upside pressure on U.S. interest rates. That exacerbates the dollar rally that it eventually leads to the EM problem that we talked about earlier. All these things are going on, and a lot of people, really smart people, are saying they don't really think China's problems are big enough to really lead to any contagion to the rest of the world. And I kind of look at that and I say, well, I don't really have the resources to do super in-depth analysis of all of China's problems. But if the kind of things that Kyle's talking about happen, there's definitely going to be a contagion to the rest of the world. So I think it's a very important question. I don't pretend to know the answer, but I watch it closely.
I think we could see, signals, leading indicators in the oil or base metals or copper price. We've had a bear market rally recently in those, but if we start to see those drop, 20% again on another correction, we start to see copper go back down to $2 a pound, maybe go even lower and stay there for a while. We start to see oil break $50 on strong volume and stay there for a while. Maybe oil even tests the $29 support level that it hit in 2016. So if we get to those levels, I think then that we would see clear indication that things are getting a lot worse in China, because the Chinese are so dependent on buying and storing a lot of different commodities. I'm a big fan of Kyle Bass, so, betting against him, I don't think in the long term is the best idea. But the Chinese banks, a lot of them I think over 90% of them are owned by the government. So I think they do have honest accounting, but I think you need to be a member, of the government in order to get it, or you need to bribe someone. Well, if you bribe someone there and you get caught, you're in deep, deep trouble. But I'm sure that happens regularly there, because they have a corrupt economy as well.
Oh, yeah, I can tell you from living in Hong Kong that the people who are really, pro-investors that are investing in the Chinese financial sector, they know that their primary skill is knowing how to separate the data from the real data, and who to go through and what to do in order to get past the official data and find out what's really going on. And it's more of an art than a science. But just in terms of how much potential volatility and uncertainty we could have, I agree with everything you just said a minute ago. And the scenario you described, where the situation in China really getting screwed up potentially takes us back down to testing those lows and oil prices below $30 again. You bet. I could see that happen. But consider this. What happens when Donald Trump takes office and he says, okay, ISIS, that's it. I've had enough. No more of this. You guys cut the crap or else. The entire half of the country, the liberal left side of the country, that's, the same people that are freaking out and going to South America because they think he's going to start a nuclear war. When he issues an ultimatum to ISIS that's open-ended like that and says, or else, a whole bunch of people are going to jump to ridiculous conclusions. And I could easily see a $25 up spike in oil prices just on hysteria that a whole bunch of people convinced themselves that Donald Trump is about to start a nuclear war in the Middle East, when in reality, all he did was to threaten ISIS to stop the terrorism acts, or else he's going to, simply do a more measured increase of support. Any kind of military threat coming from Donald Trump will cause a certain group of people, a certain demographic, to freak out and have a disproportional reaction. And some of them are investors who speculate and affect the prices of things like oil.
Yeah, I think we're going to have a wide trading range with a lot of volatility. You named one of the possible ways oil could spike. If we do have oil, go up $25, that brings on even more marginal shale oil production, which would crash the price again. So we'd be back, to crazy volatility like we've had in oil the last couple of years. So I don't expect oil to stay flat. I think it's gonna, despite the best intentions of Russia and Saudi Arabia and the rest of OPEC trying to put a price floor so they can actually make a decent profit in oil, I think, oil is going to be very wide trading range and volatile for a bunch of different factors, and it's going to really, really confuse a lot of people why it's doing that.
And at the same time, you've got other big wild cards in the system like Venezuela. Venezuela is in so much trouble, they could go offline completely. And not be able to produce any oil because they could fall into literally a civil war kind of situation there. So, on the other hand, if they're still able to pump oil, they're incented to make as much as they can and sell it cheap because they need the money. So is Venezuela going to produce more oil or less oil? That's, again, you'd need specialized intelligence and knowledge of that situation from an inside perspective to have an enlightened view. The rest of us, we've got to just wait and see what happens.
Yeah, if I was a hedge fund manager managing money, I don't know about you, but I almost wouldn't make a one directional bet on something like oil. I would almost bet on just volatility, something like a long straddle, buying options on that, pick a strike price somewhere in the middle and give yourself enough time to let it play out and bet that there's going to be, with a long straddle, a put and a call at a strike price, that there's going to be a big move up and a big move down, and you could just reset the straddle after the oil price moves one way or another.
Yeah, that's one way to play it. And the other way to look at this is in terms of the term structure. There are things that, if you look at the shape of the forward strip in WTI right now, there's steep contango through about June. And after that, you actually see a gradual backwardation developing in the WTI strip. What that means is the market is pricing that all those storage tanks are going to be empty after June and we're not going to need any storage. I don't buy that story. I think we're still going to have lots of oil. Look at the rig count. The shale guys are still, doing their thing. So I think that, for professional traders that can do things like futures spreads, looking at that curve steepener in the second half of 2017 in the WTI futures strip, that's an attractive trade. But I agree with you. Directional trades are basic. I'm trying to think. Do I have any? The only directional positions that I have on in my fund right now are dollar index longs. I don't think I have any other directional trades right now. And the reason is exactly as you say, anything could happen. So you can expect outcomes like more volatility. You can bet on that, but making directional bets here is awfully risky business.
There's also, on the fundamental side for directional bets, there's also nothing that's really, super cheap. There's not a lot of bargains. When I look at the stock market, Leon Cooperman, billionaire hedge fund manager, was on CNBC yesterday, and he was talking about his research that the stock market's 50% overvalued. So there's not bargains in large cap dividend stocks. If you're looking for income in the stock market, utilities, a lot of utilities which have no revenue growth, are selling for way over 20 times earnings. People are that desperate chasing yield due to the Fed's policy of financial repression. So, I guess maybe emerging markets you can go look for. There's some better bargains there, but then the accounting can be bad in emerging markets. So you have to be careful that the accounting is good. The one thing that I see cheap for is the gold and silver relative to other asset prices. But, the paper markets in gold and silver are very heavily manipulated. There's a lot of, it's well documented now that there's massive amounts of manipulation in gold and silver. So trying to pick timing of this for the exact bottom is not a good idea. I don't play the futures market, but, I just accumulate quality gold and silver companies that can make money at low prices when there's big corrections.
Yeah, and it's going to be interesting to see, because in the long term, I definitely am super bullish on precious metals. The thing is, in the short term, all of these factors that are so bullish for the dollar index, they really are short-term bearish for gold. So how long, and how do you play that? Do you just, try to slowly move into a position, or as you say, look for equities that can produce income even at low gold prices? Someday there's going to be a huge move up in the price of the bullion itself. I think we're going, above $7,000 an ounce someday. The question is, do we get to $700 an ounce first before we go to the 7,000? And I really have no idea. So I think that the key there will be when there are clear and present indications that Plaza Accord 2.0 is coming, that there's going to be some kind of intervention to arrest the U.S. dollar rally. That's when I would be much more bullish on a directional long trade, buying gold and expecting price appreciation. In the meantime, I think there's still some downside risk here as long as we have all these dollar bullish factors. And, there is a pairs trade I've talked about on my show a bit, where you can be long the dollar index and gold at the same time. And, usually one's going up while the other one's going down. But the scenario where both of them go down at the same time is kind of hard to imagine. So I think that pairs trade is potentially attractive. But I wouldn't want to be long gold here unless I was hedged by also having that dollar index exposure, because, again, dollar index goes up, gold goes down. Gold is priced in dollars. It's just the way it works.
Have you been paying attention or trading Bitcoin lately? Because, Bitcoin ended up being actually the top performing asset in 2016, surprisingly, because of the stuff that's going on now in India, the devaluation and capital controls in China, and the hyperinflation in Venezuela, there's record demand of people that, you know, are not libertarian, but they had money in their bank account, they have common sense, and they see their governments trying to screw them over, and they would have probably never bought Bitcoin in the past, but now they're trying it out out of desperation to buy food in those countries.
Yeah, you know, I don't trade Bitcoin, and I'm kind of a non-believer in Bitcoin, and it's not because I'm not impressed with the technology. I think it's really cool stuff. But the thing is, look at what Bitcoin is. It's basically designed to, you know, from start to finish, to create a payment system that governments cannot tamper with or interfere with. Governments aren't going to like that, you know, and the analogy that I use, you know, let's suppose that somehow you invented a new assault rifle that only kills central bankers. You can fire it into a crowd of people, and through some advanced laser technology, you know, nobody gets hurt, but all the central bankers get killed. Well,
DNA
guess what?
targeting.
The central bankers are going to outlaw that weapon pretty darn quickly, and they have lots of power. So I think Bitcoin is like that, you know, that weapon that gives people freedom from the overreach of their governments. Their governments aren't going to like it. And the thing is, you know, the governments can, even though we might not like it, they can outlaw Bitcoin. They can do something to intentionally cause all of the people that bought Bitcoin to take a huge loss just by making it illegal to ever redeem the value of them. They can declare it a tool of terrorism that, you know, is prohibited or something, and cause all kinds of damage. So it's not that I don't like the idea of Bitcoin. I think it poses too great of a threat to governments around the world, and therefore, you know, right now, yeah, it's through the roof. Could go the other way tomorrow as a result of government action that we could do nothing to stop. And so that's the reason that I don't really believe in it.
Yeah, there's a lot of volatility in there, so that's why I was asking about if you trade it, because of the amount of volatility in there. There's Bitcoin futures and options exchanges that are opening up, so you can look into that. But yeah, I know for a fact that governments are actually looking at over 90 central banks have looked at the blockchain technology, and they're actually looking at implementing it into their own government issued digital currencies. So, you know, they don't like Bitcoin because they can't control it. Who knows what they're going to do to it in the future, but they like the technology behind it, the blockchain technology, and governments are looking at hijacking that. I also know that private Wall Street banks, the large ones, are all testing out blockchain too for customers, to put exchanges, to put blockchain technology and have exchanges and trading and things like that as well.
Well, I think that you hit the nail on the head. Think of Bitcoin as basically taking the power of technology, the power of blockchain technology, and applying it to protect the people from their governments. That's what Bitcoin is. What the governments are going to do is they're going to take that same powerful technology and figure out how to protect the governments from the people, you know, so that they have all the power and they can control everything and monitor everybody's finances and do all that. And yes, I think that the future digital currency, and unfortunately, I think we will end up with an all digital, all electronic money system someday. It won't be Bitcoin. It will be the exact opposite of Bitcoin. It will be governments using the technology that underlies Bitcoin in order to engineer exactly the reverse thing, something that takes that anonymity and traceability features that Bitcoin has, that basically protects everyone's privacy and prohibits the government from interfering. It'll go all in the other direction, and all of this technology will be used against us instead of being used for us. Unfortunately, I think that digital system of currency is coming, and it's unavoidable, and they'll tell us that it's for terrorism. That's the reason that we have to have it, and we'll get to the point where you literally cannot buy a stick of gum without the government being able to trace your every action. And, you know, it's a lot of people think that that's a good thing right now. The terrorism threat has hypnotized so many people that they don't think it's a bad idea for the government to be able to trace every single financial transaction of every single human being on the planet. The majority of people think that's a good idea. Scares the hell out of me, but unfortunately, you know, that's the world we live in.
Yeah, I agree. It's dystopian, and not only would they be able to track every single transaction, Eric, I think that would also be to tax. so they could put a VAT tax on everything. So if you bought me lunch, right, and I was paying you back, the government would then take a 20% for any, even if I was just paying you back the money, the government would take a VAT tax cut on money moving back and forth in the economy. There would be nothing to stop them from implementing, all kinds of extra taxes that they could just layer on that people wouldn't be able to dodge, that we have now people dodging in the underground economy in Europe. I think 40% of the European economy is underground and cash economy, so people don't even put money in banks. India, that was one of the main reasons for this demonetization scheme that Modi was implementing. What he did with the cash. There was a lot of India's economy is cash based. A lot of the poor people and working class people in India, some of them didn't even have a bank account, and they weren't paying for things with credit cards or smartphones. So they were trying to go to that so they can track and tax every single transaction. And as someone who's a libertarian, that definitely scares me.
You got to remember, though, we are in the minority, and these things are coming, and they'll tell us it's to fight terrorism, but we'll end up with a system where not only can they tax anything, they'll be able to directly just take money out of your bank account. They'll be able to freeze all of your assets. There will be no way to have anything outside the financial system, and probably what they will do is they will also prohibit people from physical ownership of precious metals, because precious metals gives you a way to work around that and keep your assets out of the financial system. They're not going to like that, and they're going to say that there's no plausible reason for anybody to own gold or silver coins other than terrorists. Those are the only people that have any reason to want it. Therefore, we're going to make it illegal. And, you and I understand that that's ludicrous, but we're in a small minority.
Okay, so this is you're you're not making me look forward to 2017 that much. Are you shorting a lot of things now with your hedge fund in 2017? Are you long any technology, any small caps or mid caps profitable companies? Are you long anything you actually like, or are you in cash now, or are you short a lot of things? What are you doing with your own hedge fund?
Well, I have to be careful here. For regulatory compliance reasons, I cannot make any representations about specific positions in the fund other than to people who have identified themselves to me as an accredited investor. So that's a legal thing. So I can tell you my views on the market, and you can come to your own conclusions. Probably it's a good bet that what I do in the fund is consistent with my views on the market. I am very much of a sidelines mentality on this equity market. I feel like it's overdone. I feel like the valuations are crazy here. I'm tempted to be short, but I look at the credentials of people like Ray Dalio and Carl Icahn and Stan Druckenmiller all turning super bullish after the Trump presidency. And I'm thinking, boy, these guys are not amateurs. I don't want to be on the other side of the trade from them. Precious metals, like I said, I think that the view is definitely very bullish in the long term. The thing is that in the short term, the dollar rally is going to be what gets us in trouble. So I'm probably not inclined to consider exposure on the long side of gold and silver right now. If I were to do that, if I see a bottom or what looks to me like a bottom is forming, I would probably only go long if I were also long dollar index as a hedge. And again, the rationale there is they normally are inversely correlated. So if you're long the dollar index and gold takes a dive, you're probably going to make a profit on the long position on the dollar index. A lot of people have asked me about the euro, and I think the situation is very bad in the European Union. The thing is, so much of the dollar index is the dollar-euro pair to start with. It's almost redundant, to be short the euro against the dollar when you're already long the dollar index is almost a redundant trade. So whatever my bearish view about Europe is, it comes out in my long dollar position. As far as I think the really big risk, the longer term, probably not immediately, it's in the bond market, not the stock market. And we've accumulated this ridiculous mountain of debt in the last several years. I saw a report from, I think it was the Institute for International Finance, that said 345%. Now, $217 trillion, or 345% of world GDP in total debt now. How is this money ever going to be repaid? And the answer is it's not. It's going to have to be inflated away. that massive inflation that has to come someday. And I'm not saying it's starting in 2017, but there has to be a massive inflation someday in order to deal with all of this debt. And it's not going to be a pretty picture in the bond market. And it's eventually going to be extremely bullish for precious metals. I just don't know when that starts. As far as the things that I look at right now, unfortunately, the dollar index is the only thing I can think of that you could easily trade in a retail account. Well, that would be the UUP ETF, which is a bet on the dollar index going up. That's the only thing I can think of in terms of a retail trade that makes sense to me right now. The other trades that make sense to me, the one I think is most interesting is the term structure steepener on the WTI crude oil future. That's the idea that right now the market is discounting that we're not going to be needing storage after the middle of the year, that the storage problem is going to go away and those tanks will be empty. I'm not buying that story. And if I'm right, what happens is the difference between, say, the June contract and the December contract, which are about even right now, will change. So the December contract will be considerably more than the June contract. That's it's called the term structure steepener or a futures spread trade. You got to have a futures account and be able to trade those long dated contracts. A lot of them don't have a lot of liquidity in them, so it's really not something you could do in a retail account. But pretty much all the trades that I see right now that make sense don't work in a retail account except for the dollar index. So I don't think it's a really great picture here. I don't know where. I think bond yields are going to be the thing that I watch the most closely. I'm not trading it. I'm not betting on a move in either direction, but I'm watching it very carefully. Is Jeff Gundlach going to be proven right that the 35-year bull market in bonds is over? Is it going to be time to start shorting treasuries at some point? Well, even Jeff Gundlach has said that this move to 260 on the 10-year is overdone. So there's going to be some kind of pullback there. Does the sell-off in bonds and the increase in treasury yields continue in earnest after that? Do we get back above 3%? And at what point do increasing treasury yields eventually create a fiscal crisis for the U.S. government because they can't roll their debt over anymore? These are the things that I'm going to be watching in the next few years. But is that move really starting, a move back above 3% on the 10-year? Or as some people think it is, or is this kind of a flash in the pan? And maybe Raul Paul is going to be proven right, and we're still going to see sub 1% 10-year yields before this is over. I think that there's a lot of recession risk. If that happens, bond yields should move lower. Is that the time to short them for that strategic short that, eventually we're going to have a 10 or 20-year bear market after this 35-year bull market in bonds? I don't know, but that's kind of what I'm watching in terms of things that I think are going to be interesting. Inflation is going to be super important too. When we get a sudden increase in inflation expectations, we've got a very different scenario here. The standard issue answer to what does the government do about inflation? Well, you increase short-term interest rates. If you increase short-term interest rates too much, you bankrupt the U.S. government because it's got so much more debt than it did before 2008. And they won't be able to service the debt if there's a significant increase in short-term interest rates. So we could be in a debt trap where it's impossible to fight inflation, and we end up with a sustained period of very high inflation. Not hyperinflation. A lot of people predict hyperinflation. Honestly, I think some of them don't understand that distinction. But hyperinflation is a collapse of a currency system. I don't think that's possible for the U.S. dollar as long as it has its reserve currency status. But high inflation, like double digits, 15 to 20% inflation for 5 years straight, I think that's probably coming someday because I don't see how else we get out of this mountain of debt that's been created since 2009.
Yeah, we have hyperinflation now in Venezuela, but they don't have the world reserve currency. So they have a, corrupt, inept government that's destroyed their real economy, their private sector, and they're printing ridiculous amounts of currency units now. So that's hyperinflation. Zimbabwe's hyperinflation. You could go back through financial history. I agree with you. I think best case scenario when I look at the global economy is stagflation, worsening stagflation, best case scenario for a lot of the policies and the debt problem, how it's dealt with, and how it could affect the real economy. So I see worsening stagflation in the real economy going forward. Maybe we'll have a brief period of 2008 style deflation where the credit temporarily dropped in 2008 for, I don't know, 6 months or so. We had a tiny blip in the credit. Chris Martinson, I don't know if you've seen his new crash course video. He shows the brief drop in the credit on the video there. But one more question before I let you go, Erik. I don't want to keep you too long. You talked about the strong dollar being a headwind for gold. Now, correlations can change. Jim Rogers talks about, he's been around markets for a very long time. And he talks about, these normal correlations that we see, that if the stock market is up, the bond market has to be down, or vice versa. These correlations can change. Do you see a scenario where the dollar index and gold, the price of paper gold, is also rising very rapidly? So we have the dollar index going up like crazy and the price of gold going up like crazy. So kind of a lot of people, a lot of hedge fund managers or managed money is going to that barbell strategy of cash and gold, dollars and gold.
Yes, I do see that scenario, and this is precisely the reason that I really like that pairs trade, long gold and long the dollar index at the same time. And the reason is that although they are normally inversely correlated, they're both safety trades in the sense that as the situation gets worse in Europe, which I predict it will, if the situation gets markedly worse in China, as Kyle Bass predicts that it will, and I certainly, you and I think it's at least a strong possibility. If these things start to happen, potentially U.S. dollars appreciate, and that's just everybody's buying dollar-denominated assets. U.S. treasuries are becoming more attractive. Normally, if U.S. treasuries are becoming more attractive because their yield is increasing, they're gold's competition essentially, and that's negative for gold. But what if you have just a huge safety trade around the world where people want to buy safe haven assets, where they're going to be buying U.S. dollars, and that puts downward pressure on gold, but they're also going to be buying gold, and that puts upward pressure on gold. So I think they can both move up at the same time. Raul Paul has talked a lot about this scenario as well. On the other hand, try to think of a rationale for why they would both go down at the same time. And it's hard for me to see that. So if you can figure out the right hedging ratio, and you definitely want more dollars than gold because gold is much more volatile than the dollar index is. If you have a long position on dollars and a long on gold, if you get the historical movement in those two, which are inversely correlated, one is hedging the other. Whatever you make on, whatever you lose on one, you've made it back in the other one. On the other hand, if Raul is right and we do see both gold and the dollar moving up together, you've got a double win. And, of course, the risk is you've got a double loss if you end up with gold and the dollar index going down together at the same time. Well, try to construct a macro argument for why they would both be going down at the same time. I can't come up with one. So I think that trade is particularly appealing.
Yeah, I can't really see an argument for why they would both go down at the same time unless the dollar is being intentionally devalued, like FDR in 1933, and then they also start implementing like windfall profits taxes on gold or something like that, which would create a dislocation in the market between maybe the paper price of gold and then create a black market price for physical gold. So we don't know what could actually happen then if the government tries to do something like what FDR did in 1933, where the dollar was devalued against gold, and what the price of physical gold could be. Grant Williams has talked about this in some of his videos with what we see as the paper price of gold. I think the difference between price and value. He did I forget what the name of the video was.
Oh, yeah, I remember Grant's done quite a few videos. And you're right. I think that at some point, the place where you do have risk, and it's risk for gold market in general, governments generally don't like gold. And all they have to do is tell people that nobody other than terrorists has a legitimate reason to want to have gold. And they can outlaw it very easily. And of course, you and I understand how ridiculous and unfair that would be. But, we're not a big enough group to change the outcome.
We don't donate enough lobbying dollars.
Exactly. And the people that do, don't like gold very much. So I think that there is a long-term, very serious risk for precious metals holders. And it's not that the fundamentals are not there economically. The risk is when the government decides that you're not allowed to have it for some reason. And the problem is that, even if the economic fundamentals are super strong, if there will still be a black market for gold for sure, but if they are telling people that it's unpatriotic or irresponsible or bad or something, and it's going to be illegal and you'll be breaking the law if you continue to own gold, they're forced to sell it. And all of those sellers of gold would drive the price down dramatically. And, of course, it creates all kinds of arbitrages, because if that happens in one country, maybe some OECD countries agree to do that, but that's not true in another country. It creates a tremendous buying opportunity in the countries where it's still legal because it's super cheap. But then what happens? Those are probably small countries where the government's going to steal it from you anyway. So, anything could happen there. And I think it's something that gold investors should take seriously, is someday they will probably outlaw it in some way, and there's not going to be too much we can do about it.
Well, we have that attempt going on right now in India, but we have, the Chinese central bank is buying lots of physical gold. The Russian central bank is buying lots of physical gold. We already talked about how they're reducing their treasury holdings. So right now they're not doing that in those countries, but yeah, governments can change their behaviors. The governments have attempted to manipulate gold a lot. We have the London gold pool in the past. We have what FDR did to the gold price in trying to ban it. So governments, once Keynesian economics became popular, gold became unpopular. They wanted the flexibility of a elastic currency system, and they wanted to start banning gold because gold, is the canary in the coal mine with interest rates. Larry Summers wrote a paper about that. I think it's Gibsons Paradox. Okay, well, I enjoyed this discussion a lot, Erik. We're under an hour, so I managed to keep you under an hour. I could talk to you for a lot longer. I appreciate your time. If our listeners want to listen to your great podcast, how do they do so? And for our SEC, our accredited investors out there who are interested in your hedge fund, how do they contact you?
The podcast is at macrovoices.com, just like it sounds, or you can subscribe for free on iTunes. If you register a free account at macrovoices.com, give us your email. What we do is we send an email out with every podcast, so that if the guest has graphs and charts that they want to talk about, we'll send you download links. And we also have our own little research team of volunteers who looks for the very best free content they can find every week on the internet. So that research roundup email is basically a compendium of links to all the cool free stuff that we could find each week on the internet, including the Macro Voices podcast each week. So you can find all of that for free at macrovoices.com. And as far as accredited investors in the hedge fund, I can't make any representations on the air here, but certainly they can contact me through www.fourthturningcapital.com, all spelled out, F-O-U-R-T-H, turningcapital.com, or just www.eriktownsend.com. They can there's contact pages in both places, or I think even at macrovoices.com there's a contact page, so they can contact me that way.
Excellent. Well, thank you again for your time, and Happy New Year and prosperous trading in 2017.
Okay, thanks so much. It's great to talk to you, Jason, and I look forward to doing it again sometime.